Okay, well, so we'll get you more opinion. And our first on the program is Fook, Hien, Senior Investment Strategist at Standard Chartered Bank. Fook, great to have you with us here. Thank you for your time. Just your thoughts on structure here in India. How are we looking a little draggy now as far as the frontline indices are concerned, or it's good for more? I'm talking about the Nifty, Bank Nifty. Bank Nifty, of course, is just about, in the last fortnight, made a new all-time high. So what's your sense?
Yeah, thanks for that. I mean, we still do very much like the market in India. India continues to be our overweight preference within the Asia ex-Japan region. And it's really because of the growth story, I think, that's been delivering. We expect that will be continue to deliver. So yeah, we still do like India on a 12-month view. Obviously, in the near term, there's a lot of excitement about China now, where positioning was very, very low. But still, over the 6-12 months period, India clearly remains our preference. Now, in terms of the banks, I mean, our preference in the sectors as financials is one of the sectors that we are overweight in India. And it's really because we think the credit growth would really flow from the economic growth that's going on. That's going to be supportive for the banks in terms of the interest income and the activity they can generate from the economic growth. So yeah, I mean, financials is one of the preferred sectors in India, along with your industrials and staples.
Okay, that's interesting. So industrials, staples, as well as financials, that's what you like here in India. Fook, but just to go back to that point on China, right? Because suddenly there's interest in that market, and we're seeing what it's doing 2 days, 7-8% across different indices. Do you reckon that there'll be more money flow tactically for the short term? I mean, what should we expect from China? Because clearly the PBOC is not done. They're saying there will be more rate cuts and more easing ahead.
Yeah, I mean, our expectation has been that the policy support will be ongoing and consistent, but just enough to keep the economic growth stable, right? We're not looking at a big bang kind of a policy rollout to really stimulate the economy massively, but we're looking at consistent, very targeted policies that's going to be ongoing in terms of how we can keep the economic growth stable. Look, I mean, the policy that was being rolled out on Monday, I think, it has taken the market by a bit of a surprise, and that's why we saw a very strong reaction. We think positioning was very, very low in the China markets, and so the policy that was being rolled out, I think, gave a bit of reason. So tactically, we think it can still go up. Valuation is still cheap, especially for the Hang Seng Index, still below 10 times. So coming up to 20,000, that could be a technical resistance for the Hang Seng. So in the short term, yeah, there could be more excitement in terms of the policies one might do, including some support for the equity market investments as well. But longer term, in terms of consumer sentiment, right, I mean, mortgage costs will come down because of monetary policy easing, but there's still worries about the property market, and that's really still weighing on sentiment. We need to see the property market stabilize before the consumer sentiment can really pick up. So on a 6 to 12-month view, we're still neutral on China equities. I mean, we do like equities globally, so we say they'll be invested in China because, you know, if you blink, you miss the rally. Big days like this helps to be invested. But we do have a core view on the 6-12 months. We think the growth in areas like India will still trump, and so it becomes much more important.
All right. Hi, Fook. Good morning and good to see you. So you're sounding way more positive on India than China, though in the near term, very near term, you're saying maybe China, because of its underweight stance, could outperform, though in the next 1 year, you're still expecting India to do better. You know, you're overweight on US markets as well, I think, and the tech sector is something that you like out there. What about the Indian tech sector? You know, that as well has been fairly resilient. There are calls that maybe, in fact, growth starts showing up from FY26 onwards. Your take?
Yeah, I mean, we've got a neutral view on the tech sector in India, really. I mean, as I said, our preference is for those 3 sectors, as I said. And I mean, yeah, that's the tech in terms of how we were looking at it. AI is still going to be a very big thing. And that's where the focus is really going to be in the US, where they are very much at the forefront in terms of the investments. We're still very much in the early days, we believe, in terms of the AI investments. So the US technology sector is still where we prefer. And besides the AI investments and semiconductors, there's also the software. You know, there's a very stable, defensive, recurring growth that we see in the US software companies.
Okay, Fook, finally, just a word. I don't know how closely you track autos across the region and whether you like that space. Just wondering, because Hyundai is looking to list its India business, and it's likely to be one of the biggest, primary issuances we've seen in this country. They're apparently aiming for a $20 billion valuation. So just any thoughts? I mean, whether as a foreign investor, whether you'd like to buy the stock in the home market, or whether you'd be interested in, specific listing in India and then buy here, irrespective of the valuations because of the growth.
Yeah, I mean, I'll shy away from talking about single stocks just because I wouldn't do that on TV. But look, I mean, in terms of the auto space, we think that the exposure to India is great. We've seen some of the Japanese companies with exposure to India that's been driving it. That's been very, very positive. But the space within the EV and the transition within that, price competition has been very, very cutthroat. And so we're looking in terms of how the Chinese automakers are very much leading in terms of the EV space. But price competition is a very big thing. But volume growth is still growing. But the trend, as you know, in the US, it is coming down a little bit in terms of the preference for EVs. But then within China, they're still definitely leading it. But in terms of the flows, cross-border flows, there's a lot of nationalism coming into play as well. But within the whole space, I mean, we'd be more targeted in terms of the auto companies to get exposure to.
Okay, all right. Fook, great talking to you today. Thank you very much for joining in, and wish you a good rest of the week.